Hello and welcome to Crux Investor. We caught up with Peter Giannoulis today. He's the CEO of Allegiant Gold. Some nice drill results recently. We talked through their business model, having farmed out 3 of the 10 projects. They've got some income from that, so non-dilutory for shareholders. And we look at what they're focusing on. Eastside is their flagship project. What more can we expect to see from that this year? And if you want our thoughts and opinions on the conversation, you can find that at cruxinvestor.com. We'd love your feedback too. So do give us a like, leave your thoughts below, get back to everyone. And if you want to see precisely what we talked about today, take a look in the description below. Peter, how are you, sir?
Hi, Matt. How are you?
Really good. Haven't seen you for a year. What have you been doing?
Yeah, I'm doing amazing. We've been very, very busy at Allegiant. I mean, clearly the pandemic has slowed a lot of companies. Fortunately, from our perspective, we've been open for business, and we've actually had one of our busiest years in terms of drilling over the past 12 months. So they're going well. Assays are coming out, and things are just going as we predicted, which is just executing our business plan. And we've stuck to our business plan throughout the pandemic. So we're pretty happy how things are going with us.
Okay, well, given it's a year, I'm going to run through some of those headline topics in a second. But how's Miami?
Yeah. Miami's great. I'm between Miami and Reno, where is our, basically where we're headquartered. But Miami was just more of something I moved from New York 18 years ago. And it has really been an amazing place to spend the pandemic, not because of only the weather, but the fact that Florida has taken a different approach to dealing with the pandemic. And I think with some very good results. So it's a great place. It's been a great place for a year. And a lot of people are moving here, that's for sure. Europeans as well as people from the New York area.
Wowzers. So house prices through the roof. I've missed the boat, haven't I?
It's insane. I compare housing prices, my friends who live in Greenwich, Connecticut and other places. And, some certain parts of Miami are far more expensive on a per meter basis for land than many places in the Northeast. It's crazy.
They were already expensive, Peter. My memory of Miami. Mm-hmm. Hey, well, good to have you back. Enjoyed the last time we spoke, but I think given it's a while, we'll have to probably go through a few things again, but we're going to speed through it. But first of all, give people who haven't heard the story before just that 1-minute overview, and I'll pick it up from there with some questions.
All right. Well, thank you. Well, Allegiant, simply put, is a mid-stage gold exploration company based in Reno, Nevada, expanding and developing its flagship project called Eastside with an inferred resource of 1 million ounces of gold and 8 million ounces of silver, approximately 30 kilometers from the town of Tonopah, Nevada. In addition, Allegiant owns 9 other projects in Nevada, New Mexico, and Arizona, of which 3 are currently farmed out, which generates valuable cash and share positions in other companies. I think there are 5 main characteristics that taken together separate Allegiant from any other gold exploration company in the world today. First is a large resource that has the potential to grow significantly. Second is a strong technical team led by Andy Wallace, who is one of the preeminent geologists in the history of Nevada, who have found and put into production more than 5 major gold mining assets. And 3 is jurisdiction. Nevada continues to be ranked as one of the top jurisdictions in the world. It's very easy to do business, relatively inexpensive to drill. The infrastructure is just amazing. And then 4th is cash flow, which generally separates us from many other junior explorations. Because of our model of focusing on one project and then farming out our other projects, we're able to generate cash, which basically pays for all of our overhead. And then 5th is skin in the game. I don't know, and I may be mistaken, but I don't know of any other company in the junior exploration gold sector that in which management and insiders have purchased in the open market as many shares as the insiders at Allegiant. Since September 2019, the combined entity has purchased over 16 or 17% of the shares outstanding in the open market. So those 5 characteristics taken together really separates us from the crowd. That's basically a 1-minute introduction to Allegiant.
Yeah, good summary, actually. Use those as talking points. Okay, we're at 37 million market cap today. So it hasn't been exponential. It's kind of funny year for you guys, a really volatile in terms of the share price. Partly
Yeah.
because obviously gold did its thing last year and then kind of dropped off towards the end of last year. But I want to focus. Do you know what would be brilliant? Remind people of your background. I think that would be a good starting point, and we'll get into the talking points from there.
Sure. I started my background at Salomon Brothers in the mid 90s in one of their hedge fund groups and helped grow that into a multi-billion-dollar business where we later spun out after a few mergers and acquisitions to a company called Citibank, and we spun out of that in 2004. I also started my own fund, which was a private equity hedge fund in 2005 that focused primarily in the natural resource sector. I did that for about 12 years. I've sat on the board and helped other mining companies get started, as well as helped them through some M&A activity. But I have been in the mining and the resource sector for about 23 years, since 1997, so 24 years now. And I was on the board of Allegiant and have been on since 2009, so about 12 years now. And I took the CEO role of Allegiant back in September 2019, and have been running it ever since. So that's a
remind us why you
background.
stepped in. Remind us why you stepped in.
Well, I mean, I was a shareholder. I've been on the board. I understood the company very well. I was very much involved in the acquisition of most of the projects that we had over the past 12, 13 years. And there was just really a void in that role. Allegiant had spun out of Citigroup, of Columbus Gold, and creating two different companies, one in French Guiana and one in Nevada. I was really the natural choice to take the CEO role over to advance the company because of my knowledge of the company and my past background.
Okay, it wasn't really moving before you stepped in, right? I think that's fair to say, right?
Yeah, I think that's fair to say. I mean, but there were other reasons. But yeah, I mean, the company really was kind of really without a direction because it had just spun out of Columbus Gold. There was two competing interests, one in French Guiana, which was a very large, wonderful asset. It just happens to be in French Guiana, and then the other projects were in Nevada and it was just a natural role for me to take. Right.
Okay. So since then, September 2019, there's been some activity. But do you think? Because I'm looking at the last year. There was, like I say, peaky in places, but pretty flat. I'm not quite sure what people's expectations were, or is it the fact that you don't talk to the market very much? I mean, why are you taking this kind of very cautious approach to the marketing yourselves? Because you're doing some drilling, seeing some nice numbers, press releases look okay, but you're kind of quiet.
Well, I think it has to do with the way we approach it. We tend to be very conservative in the way we approach everything, and we don't necessarily want to be overtly promotional. We've tried that; it's just not part of our makeup as individuals. And we take a cautious approach. We're very disciplined in executing our business plan, and we're just not one of those groups that are going to put out a press release that says the wind shifted from 20 kilometers to 15 kilometers to the west. I mean, and I'm trying to make light of it, but the reality is there's a lot of that going on. I think it's hurt the industry as a whole just because people come out at we contracted a drill rig. Well, why is that newsworthy? Because we contracted a rig or we hired X company to do geophysical work. And we've tried that. We just don't like that. And we will come out with news when we think it's something that warrants it. And, people may or may not like it, but I think that patience has paid off. We've been very disciplined in how we've executed our business plan. We continue to execute. And, investors that take a long-term perspective as opposed to, are you getting news out, will be well rewarded by investing in Allegiant. I know very few companies that have been able to advance their project and getting some of the results we're getting. It's going to be on the timetable of an exploration timetable. And, so to answer your question, we're just it's not in our knitting to be overtly promotional.
So you've run a fund, you're a banker background. Mm-hmm. You're looking at the 2020 market and you saw lots of companies doing the opposite of what you did. I mean, their valuations went sky high. I mean, they trebled, quadrupled, even more in a number of cases. How can you argue that yours is the right method and theirs was wrong in that case?
Well, I'm not arguing whether theirs is right or ours is wrong. I'm just arguing what our knitting is, and whether it's good or bad. That's for the market to decide. Clearly, we believe on a relative basis, where I can't argue on the absolute side, but on the relative basis, we're grossly undervalued. But and maybe their models work better, and I can point to a few companies which I will not mention, but that have done an amazing job promoting it, and I take my hat off to them. But I can't paint stripes on myself and call myself a zebra when I'm a horse or some other type of animal. It's just who we are. We've tried it, Matt. Last year we tried to promote, and it just doesn't feel right for us. We're going to get the news out. We'll host the webinars. We'll promote the way we feel comfortable. And coming on a great show like yourself, who asks difficult questions, we try not to avoid that. We actually, try to seek out individuals that ask those difficult questions, because I believe that's the only way that a company can really stand out. The easy softball questions really doesn't separate anyone.
I'd agree with that. Let's talk about the model I explained to people. You talked about having 9 assets, right? 3 of which are farmed out. This is the kind of interesting bit. This is a bit of a differentiator for you guys. So talk about the 3 farm outs. What does it give you in terms of cash flow, etc.?
Yeah, so we have 10 projects. Not one of them is our flagship project. That receives 100% of our resources. Okay. They have 3 other projects, which is 4 Metals, which is farmed out to Barksdale. We have Mogollon, a wonderful silver project, high grade, which is farmed out to Suma Silver. And then the third one is Bolo, which is farmed out to New Placer Dome. Those combined companies produce generate with combined around $1 million in cash to our treasury every year. That more than covers all land holding costs and our G&A. I wouldn't say more than, but it sufficiently covers our burn rate. Anything above that that we raise, if we were to raise any capital, would go straight to drilling. And the next logical question is, well, how much do you have in your treasury? We have a little bit over $1 million in treasury, but we are constantly getting payments, and we'll be getting a series of payments in August and September. We feel very comfortable over the next 2 years that we're well funded to be able to get through any difficult times. And it's one of the main advantages of Allegiant. We haven't had to blow out our share structure like many companies. I mean, we've looked at other companies when we started, and we both had 50, 60 million shares outstanding. And there's a few companies that are in that universe that now have 150 million or 200 million shares. I'm not trying to be critical. It's just the approach that we've taken, where we have 78 million shares outstanding. We're extremely cautious in how we issue shares. Now, we are in the business of exploring, and that requires capital. We just won't raise money unless it's accretive to our investors. So we take a more disciplined approach on how we raise capital for exploration.
Okay, so with that circa $1 million coming into you, and I get the timelines. August, September is important. So they come. Are they annual payments, quarterly payments? They're annual payments. They're just not they're not on the same time basis, right? It depends when we had signed that farm out. So some of them are, I believe, in April, and some of them are in August, and one of them is in December. Got it. Okay, fine. So you reckon for the next 2 years, if you carry on as you currently plan to, you're kind of good. You're good on the G&A. You can pay your bills, but doesn't sound like very. I get the conservative nature in terms of going and talking to the marketplace, but it doesn't sound very aggressive in terms of the drill program. So what is the drill program? So we had announced a 15,000 meter drill program. We've completed 10,000 of that. My guess is we're going to add to that significantly. Over the next 12 months, Allegiant will most likely see over 30,000 meters of drilling. That is by ourselves and our partners in our farm out. So I know the market wants to hear news flow, and I'm whether I agree or disagree with that philosophy, we're going to have a lot of news flow, because we're going to be drilling, and our partners at Mogollon, which is Suma Silver,
and then New Placer Dome at Bolo will be drilling significantly. So we look forward to the next 12 months as one of the most busy periods in our history as a company with significant amount of drilling. How do we drill our own projects? Well, after the most recent drill results, it's clearly, we really need to follow up on many of these drill intercepts, and which were the best in the history that we've ever drilled, and probably some of the best in Nevada over the last 20 years, at least one of the intercepts. It really behooves us to go and follow that up by drilling. Now, it's not clear whether we can fund that with our current treasury and the current inflows, but we're going to make that judgment as the markets dictate. And if we have to raise money, we'll do that. But we have the clear advantage of being patient to find the right moment to do that. And historically we've done it. Like last year, we raised $3 million in July. And we reused all that money to drill. It wasn't that we raised 3 million and used 30%. 100% of that money went into the ground.
Okay, so you've seen a spike in the share price recently off the back of good announcements. Yeah. You say you have got the patience. You can move at your own speed. You've made a few quid. You're a big shareholder, and that's the right strategy for you. But if you've got retail guys in here sitting in your stock, you're saying to them, "Hey, this is a get-rich-slow scheme. Bear with us. It'll be fine. We'll eventually get there." Maybe they're going to be distracted by some of these other kind of get-rich-quick schemes. So do you have a responsibility to shareholders to maybe be a little bit more aggressive?
Well, I don't agree with the premise. So, we're not necessarily trying to track the get-rich-quick schemes of investing. We're an exploration company. We're not a pump and dump type of operation. I'm sorry to use that word. We're really just, if you want to invest in exploration, it is a moderately long-term investment thesis. We believe that, investing with us over a 3 to 5 year period, you're going to do exceptionally well. And, we also believe there are plenty of catalysts, which I've alluded to with Mogollon, with Bolo, and with Eastside. So, irrespective of whether we raise money or not raise money, there's going to be a significant amount of news flow coming out, primarily through our partners and through ourselves. So, I probably would characterize it as we have plenty of news flow, whether we raise money or not. It's kind of irrespective of whether we raise money, there will be a lot of news flow.
Are you viewing it as the way that you're doing it? Are you viewing that as a way to guarantee longevity? If I always say to people, 19 out of 20 of these explorers won't ever make it in the current form. Yeah. They'll have raised too much money, diluted, et cetera, et cetera. Is that what's driving this methodology that you're employing?
No, what's driving it is that this is an exploration company. It takes time. You have to drill. You have to analyze those results. Then you have to go on the back of those results and design a program with which we have a master program at Eastside. I can tell you what we're going to do for 3 years, but on as you receive results and assays, then you adjust that program and adjust it for the next phase within that 3-year program. And we take it in 1 year segments, but we build out a 3-year rolling plan. So it's not a function of what the market wants to hear or anything. I wish I could rush it. I wish I could get assays faster. I wish we could interpret them faster, but that's just not in the cards. And we're going to do things irrespective of what an investor wants us to do. Sure, I think we're extremely respectful to investors, and we're trying to move forward as quickly as we can. But this is exploration. Anyone who thinks they can do it on a reduced timetable is, I'm not sure. Well, they may be a lot smarter than we are.
Okay, let's talk about Eastside. It's your flagship project. You talked about being able to look at 3 years of what you want to do. What you can't tell me necessarily is if that's going to be 3 years where you are going to try and condense it, and how much money you are going to throw at it. So what can you tell me today?
Well, today we have a high level of certainty that Eastside is going to grow significantly. It's not guaranteed, but we believe that we could double. We believe we have a relatively clear path to double the resources at Eastside. What we don't know is Eastside 2 million or is it 5 million ounces or larger? And clearly it's open across every direction that we've been drilling. So on the west, north, south, east, at depth. And then that doesn't include, so part of Eastside is a north zone, which is where the pit zone is, but we've also drilled in December, the Castle Zone, which is the south part of the Eastside district. Now, Eastside is a very large project. It's almost a district-sized project. So on the south side, we drilled 49 holes, shallow. The mineralization, it was low grade, but it was also at surface. So, relatively low strip ratios. And this is something we're evaluating on potentially that being a starter pit area. It's not connected to the original pit zone, but it would make a wonderful operation. The infrastructure is flawless. There's a highway that's right there, and there was a previous pit on the Boss part of the Castle Zone. So Eastside is growing. It's gonna grow very large, and our job is to ensure that we prove that up, and I think that's what we're doing. And I wouldn't do anything different than we've done in the last 12 months. The market may want us to talk about how we cut haircuts or something. But we really are, we're spending money, we're drilling, we're doing exactly what we said we're going to do.
Okay. So you've got the Castle Zone off the side, but
yeah,
Eastside it's probably all you've got money for, and it is the focus, and you are going to move that one forward. When you sort of see what's happening at Castle Zone, etc., does it not make you curious about what else you could be doing with the rest of the assets in the portfolio, or are you just happy to sit and bank those until you've kind of created the value at Eastside? What are the kind of debates that you're having?
Well, I think that our debate is a little bit different than anyone else that would have this portfolio. If Eastside didn't have a resource, then it would be nice to spread out your eggs. Spread out your bets across different portfolios, but it would be, in my opinion, would be ludicrous for us to take money away from Eastside and put it at Overland Pass or Browns Canyon. Why would we diversify when we already have what we believe is a tiger by the tail? And it would be really an inefficient use of capital. The best use of capital is just continue to grow Eastside. Why am I going to try to explore and trying to find another resource, which, if we were lucky to get another resource at another of our projects, would only make the problem worse, because now how do I allocate future capital, right? So I think that our model would be, and we receive offers for our other 6 projects that are not farmed out all the time. It's just, we're not going to farm out our project to a, fly by night operation that just started and raised $2 million to do that, because part of what we receive is shares in a company. And we have been very fortunate that the companies that we have with whom we've associated are absolutely great companies who have done a great job of advancing their companies. And it's rare in this industry where you farm out, get shares, and those shares actually appreciate in value. Well, that has been the case for us. And I think that's a testament to how we've selected our partners. It may take us a little bit longer to farm out these projects, but we're not just going to farm it out to someone else who wants to flip them or promote the story. We want someone who actually does work on the projects, because that means no value to us if they just promote the story.
Why are you being shorted?
I don't know. I don't focus on that. It's a good thing. They're gonna have to buy back the shares at some point in time. It doesn't affect me.
Okay.
Let them short it. Good luck.
Said the finance guy. I love it. Okay. Well, let's come back and talk about some of these farm-outs, okay? Because you've given us.
Oh well, may I interrupt?
Sure.
I believe that some of the shorting will even out. I think that I believe that most of the shorting is just people shorting the stock to exercise the warrants that we have outstanding, which expire very, very soon. So that's my guess. I don't know with certainty, but I would presume, given that we have been getting some warrant exercise forms, my guess is that about half of those warrants are in Canadians' hands and half of them are in Americans' hands. Americans won't short to exercise the warrants, but Canadians do.
That's interesting, isn't it?
Yeah.
That's an
Yeah, well,
interesting psychology there.
well, more than a psychology, I think it's just I don't believe Americans can essentially short Canadian stocks to exercise the warrants. I think there's a rule against it in the U.S. I don't think that rule exists. I know it doesn't exist in Canada.
Yeah, we've talked about naked shorting in with Canadian stocks versus US. Topic for another day. Hey, let's talk about the format, please, because it's giving you income. Have you got an idea of how much money, how many meters are being drilled on each of those by your partners?
Yeah, I do. So we'll start from our project on the border between New Mexico and Arizona called Mogollon. It's an epithermal silver deposit, very high grade, wonderful project. And we farmed it out to Suma Silver, who is absolutely one of the premier silver companies out there, run by a guy named Galen McNamara, who I really think very highly of. I've gotten to know him very well over the past 14 months. It's rare to find someone in this industry who really is of that caliber, and I think they've done an amazing job. To answer your question, I believe they're going to drill between 5 and 10,000 meters over the next 12 months. They had applied for their permit, and I believe that's forthcoming in the next month or two. I believe probably sooner, but let's say within the next 2 months. Then Bolo, which is managed by New Placer Dome, which we have farmed out to, they're working on earning into 50% of the project. It's still 100% owned by us. They have to spend 1.5 million Canadian dollars this year to comply with the farm out agreement. That probably translates to 6,000 to 8,000 meters of drilling, potentially more, depending on whether they'll do core or just RC drilling. And then those are the two. The third one is called Four Metals, owned by Barksdale, another very well-run company we like. But they don't have plans to drill that. It's part of a land package that they've acquired and are putting together a district within Arizona for base metal plays.
Right. Okay. Interesting. So with Bolo, I mean, it doesn't sound like a lot of money. I mean, what else have they got on? I mean, what's your expectation for both Suma Silver and Bolo to actually progress with that format? Because obviously these are options. They come and they go, depending on the size of the company, and what their core focus is. Things change, right? So do you have regular conversations, updates with these guys?
All the time, and have very good relationships with all of our farm out partners. I make it a point to have these conversations to understand what's going on, try to help them think through an issue. I have a long history with many of these projects. I may be able to provide some insight. In the case of Mogollon with Suma Silver, I think we've been instrumental in helping them understand it. It's a project we've owned for 15, 20 years. And, we did work on it as we farmed it out to a company we sold it actually to a company called Santa Fe Gold. In 2011, it was Santa Fe ran into a lot of problems and gave back that project after paying us significant amount of money, millions of dollars. And then we farmed it out to New Placer Dome as well in 2018. That was returned to us as they had purchased Kinsley Mountain, and it wasn't really their focus. Silver wasn't going to be their focus. And it was very, very opportune. It was very fortunate for us. It worked out very, very well. And we farmed it out to Suma Silver. And I think Suma Silver is they are a silver focused company. They're well funded. I would think this is just the beginning of their drilling, and they're just starting their farm out agreement with us. Bolo is now in the third year of the farm out agreement. So things are escalating in terms of the drill program, and they've complied with everything, and they've drilled what they said they're going to drill. So I don't know beyond that, beyond this year, what the plans with New Placer Dome, and I'm taking it really year by year. And this year they need to spend $1.5 million to continue to earn into the agreement.
Well, like you say, it comes down to like picking the right partners who are going to want to have access to capital and show intent and actually do something. So just coming back to some of the other assets, you said we're not going to farm out to like a $2 million company with no cash, etc. I totally understand that, but are you having those sorts of conversations with meaningful groups on any of your assets? Do any of your assets actually have value, or is it just is it a nice thing to say, hey, we've got 9-10 assets over here? It sounds good, but what's the reality with each of them?
Well, we wouldn't hold them if we didn't think they had any prospect. We started at 26 projects and we've whittled it down to 10. So, I mean, our philosophy is why own it to pay land holding cost and claim fees and every other fee? It's just not worth it. So, and if we believe that it's not prospective, we will get rid of it. We're just not holding it to hold it. Do we believe some of our other projects are very prospective? Yeah, we rank our projects every year based on what we think is from a prospectivity perspective. I mean, Goldfield West is one of our best projects that we own, period. And that is, right across from Gemsfield, which is a mine being built literally a kilometer away from us in right next to the Goldfield district. And, about 50 kilometers south of Tonopah, 50 kilometers south of our East Side project, maybe 30 kilometers south of Tonopah. So, we have great projects. Browns Canyon is a great project. Overland Pass is right next to Bald Mountain. When I say right next, I don't mean 10 kilometers. I mean like they share a fence. And so there's some great projects. It just doesn't, as a focus company, we're at this stage, we're not allocating any cash. Are we getting? I think the first part of the question: are we getting interest all the time from companies that are probably don't meet our criteria, and a few companies that absolutely would meet our criteria, but maybe the offer is just not what we're looking for in terms of compensation, and we'll address that. Although gold is continuing to do well, I will say that the junior exploration market, by any stretch of the imagination, is not in a raging bull market, and no one would think that gold at 1950 or 1900 or anything over 1700. We would see the junior mining market, mired in a not in a great market. So, but once again, they're not our focus. We have, they're not excessively high holding costs, and we're willing to be patient and ride it out until we get the offer that we believe will compensate us for, and also the partner we're looking for.
Okay. Do you want to go through your intermediate goals and objectives? I've got 4 in front of me. Grow East Side into multi-million ounce gold oxide deposit. You're going to do 3 things. Mm-hmm. Path to 2 million ounces, scoping studies, PEA, and 20,000 meters additional drilling by 2022. So how are we doing?
We're doing amazing. I think that we're on path for all of those things. So I feel extremely comfortable that those goals will be achieved I'll never say without a doubt, but I think we're well on our way to achieving those things. Now, the scoping study, which we have, or PEA, which we've been contemplating, would be on the Castle area, not on the original pit zone. The Castle area is very well understood. There's been hundreds of holes drilled there historically, as well as 49 by ourselves. So there is a very well understood deposit there, and we believe it can grow significantly. That will require some infill drilling and some expansion drilling. But we know that there is a limit somewhere, whether the Castle is going to be, and these are global resources, well, it's 500,000 or 1 million ounces. Well, just in that part of East Side, which is not part of our current 43-101, well, we'll address that soon. On the original pit zone, for us to move to a PEA or scoping study would be, in my opinion, silly, because we still haven't found the limits of the deposit. And just that's where the 1 million ounce of gold and 8 million ounces of silver are contained right now in pit. That can grow significantly, and it would be, I think, too preliminary to move to a scoping study or any PEA. We need to drill more there and find the limits of the deposit.
Okay. Number 2, resource estimate of Bolo, additional 10,000 meters by 2022. Initial resource estimate. You just said 1.5 million gets you 6,000 to 8,000 meters. Is that confident?
Yeah, I think that's right. I think it depends on whether it's a core or RC, because core is a little more expensive. But I mean, we don't control whether New Placer Dome is going to move to a resource estimate. I think that after this next round of drilling, I think that they could conceivably move to a resource estimate at Bolo, and I think confidently would have some, I don't know what the resources would be, but we made the discovery in 2016. They've followed up on that discovery. And, there's definitely a resource there. I don't know what the size is going to be, but there clearly is a resource there. But Bola could once again could also grow fairly large.
Okay. Like you say, you don't control their plans. You can't make them do it. So you'd like them to, but that's a sit back and wait and see. Not in control of that. Farm out 2 additional projects. That's on top of the 3 you've currently got.
Yes.
By 2021. But when you say by 21, I'm assuming you mean by end of in all of these cases.
Yeah, by end of.
Right. Okay.
Yeah, that's going to be contingent on the market as a whole, right? So if you ask me today, do I feel confident that we're going to farm out 2 in the next 6 months or 7 months? I don't know. I mean, look, in 2020, we farmed out 2 within a 4-week period of time. So if the market gets hot and companies come knocking on our door, then it could easily happen. And it could happen over a very short period of time. Today, I have no way of gauging whether we'll be able to achieve that in the next 7 months. It could happen, but
okay.
It's
but you'd like
really
it
a function of things.
You'd like to because it could bring a little bit more cash in terms of, again, G&A drill program.
Oh, I'd like to farm out.
That's
I'd like to farm out 6 other projects, right? Because we want that projects to be worked on. We want to receive cash, and for us, it's in the best interest of our our shareholders to get those projects worked on. But we also realize that bringing in a company, the wrong partner, is also could be more destructive than not doing anything.
Okay. The reason I ask is you kind of lay these things out there, and the reality is, like, some of these things you're in control of, some of the things are market dependent, some of the things which obviously affects ability to talk to partners, which affects the ability to, as you say, provide further cash, etc. Okay, so the last one is list on NYSE, Amex, or NASDAQ, and you've written 2 reasons here. Mm-hmm. One is contingent, I suspect, contingent on reaching 100 million market cap. You're 37 million today. You're going to need to meet listing requirements, as you say. So you can do something to control that, but again, gold's going to have to pop up more than it has been, and you're going to have some nice drill results here. So again, it's sort of in your control, but not. Is that right? Yeah,
but I'm also a big believer. You put out what your goals and your objectives are, and you try to achieve that. Some of them you will try to. I'm a firm believer that investors need to know what are the objectives of a company. I mean, and it doesn't mean you have to achieve those, but you need to know where your North Star is. And we understand where we want to head. And getting to an NYSE Amex listing seems a little far today. But we have an objective, and we have set our goals, and some of that we can control, some of that we can't control. And there's many paths to get there. It's not just growing your market cap. I believe there's consolidation in this industry that needs to occur. I think that Allegiant will be. This is my guess. I'm not alluding to anything, but I believe Allegiant will be at the center of that for all consolidation within the Nevada side of the business, or at least the Southwest of the United States. There is very few companies that I can point to that have this portfolio and the resources and the wherewithal that we have. And if I were looking back and I was a fund manager again, and as opposed to running a mining company, I would start with Allegiant as my consolidation vehicle, and then start pulling in assets across that, or not even assets, but other different types of resources that are associated with it. So there are different paths to getting to an NYSE Amex. I think consolidation is one of them, and I'm a firm believer. And we have been, I would say, proactive in getting companies to start thinking about potentially merging in the sector. There's too many exploration companies as a whole. But with that also, Matt, there's not a lot of great candidates to that we would like to merge with. We're not going to merge because we want to get bigger. There has to be some other benefit to us, whether that's another great asset or just a great team that we want to put together.
Yeah, I agree with you on the M&A side of things. I think it does need some consolidation. I think a lot of companies overvalued out there. Every CEO will tell me they're undervalued, but there's a lot of overvalued assets out there, but on a fundamentals basis.
I agree.
So you're a fund guy. Are you an M&A guy? Have you got the energy to do some of this consolidation? I know you're saying I can't find anything at the moment, and I don't know how far and wide you've been looking, but are you the guy to take this forward and use your vehicle as a consolidation vehicle, or are you going to sit back and let someone else do that for you?
Well, we're not a one-man show. If you look at our board, I mean, it's laughable because our board could be the board of Kinross or some other big company, right? This is a preeminent board. Almost embarrassing that they're on the board of a $40 million company. I mean, I say that in jest, right? There, you have, Gordon Bogdan, who was a premier banker at National City, and also a geophysicist, someone who I work very closely with on a daily basis, or at least a weekly basis on the board. He is targeted with the M&A opportunities. I don't do the M&A day to day. I let Gord run that show and then come back and report to me, and we have a conversation. We have a call in 4 hours to go through our weekly list. And then Sean Nichols as well is involved in that. He's part of that committee that looks at M&A. He has a 30-year experience in the junior exploration. He knows everything. He knows where the skeletons are buried. He knows every management team. He knows almost every project. And then you get into Andy Wallace, who knows every single project in Nevada and has probably drilled every single project, and he knows them. And then you have Norm Pitcher, who was the president of El Dorado. Norm has been, for me, the great surprise of everything, because his knowledge, his demeanor is just amazing. And working with Norm has been probably one of the most pleasurable things in my history of junior mining. He had so much pragmatism and so much value to us. That board that we have has been one of the greatest tools or resources that I personally have access. So to answer your question directly, yes, we are well equipped to do M&A activity based on the board, not based on me.
It always makes me smile when I see boards like this and comments like yours. They know where the skeletons are buried, and he's probably tried.
Yeah.
The information I get after we finish filming a lot of CEOs, again, it makes me smile because you know where the train wrecks are. You know which companies aren't going to work. They don't have the assets fundamentally, and it's just a promote play. You guys don't say a damn thing. And all these retail guys are sitting there staring and go, oh my God, what do I look at? They all look great. They all say the same things, but you guys know.
Well, I mean, as once again, I won't mention names, but there's been companies that have built hundreds of $millions market caps, great management that have done it on projects we turned down 5, 6, 7 years ago. And would I take them today? No, but it is what it is. And I give them all the kudos and all the great, I can't heap enough praise on them for actually doing what they wanted to do, and which is build a large market cap company, which has many advantages. I'm in agreement with you. They're able to actually buy credible assets. They're able to, our strategy and my philosophy doesn't necessarily mean I'm right. It's just who we are. It's our knitting. I'd love to go out and promote and get a $500 million company or $1 billion company based on promotion. It's fine. There are some great people out there that do that. We are trying to promote. We're trying to get the news out. That's why, I like talking to people like yourself. There's only 2 or 3 that we're going to talk to, just because we also don't want to associate ourselves with non-credible people. So that's how we approach things.
Peter, love catching up with you. I loved it last time, and I liked it this time. I appreciate you making it. I know it's early in the morning for you there, and you've got a busy day ahead of you. So appreciate that. Stay in touch. Let us know how you get on, okay?
Thank you, Matt. Take care. Likewise. Have a great day.